The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And as we do every Monday, Wednesday, and Friday, it is a beautiful time for the Power Trading Hour with me, David White, on Friday, June 1st. Hang on just one second. I've got to do a little email here. There we go. Anyway, today is, we like to start the day off every Monday, Wednesday, and Friday, and talk a little bit about what day it is. Today it is celebrating the Heimlich Maneuver Day. Unfortunately, I don't know if anybody's ever had this, but it certainly happened to me, and that is I had a friend call it something other than the Heimlich Maneuver. He always called it the Heine-Lick Maneuver, and it will stick in my brain now for the rest of my life. No one can ever say it without me thinking about it. He's changed the way I've thought about it. Of course, being able to go in and grab somebody and squeeze on their, pretty much around their stomach until they pop whatever piece of food or foreign object they have out of their airway, probably saved hundreds, if not thousands, of lives. I was in a restaurant once where a guy shot, I have a feeling it was a pickle, all the way across the room when he did it. It popped out just like a cork. Flew all the way against the wall and hit it and made a nice stain on their nice painted wall. But I guess it is what it is. And it's kind of nice to have something named after you, even if it's a maneuver. You know, I kind of think probably worse would be if they named a disease after you, because it probably means that, you had the disease. A maneuver, maybe one step above it. And if you get a day named after yourself, probably better, or maybe the keys to the city or something. But the Heimlich Maneuver and the Heine-Lick Maneuver, which will always stick in my brain. But nice day. Ugly day in the markets. Started off with jobs numbers that no one could even think of fudging. And, of course, the revisions from the two previous months come more in line with what everybody was thinking. I was thinking fairly much long-term bullish unless we got a close under 1285, which I said would change my mind on a long-term outlook. And we certainly are going to get that today, I would imagine, unless something changes significantly. This morning, I wanted to give it just a little bit more rope. The first 2 hours volume was extremely light. We had less than 1 billion shares into just about 11 o'clock. And if normally someone won't come along and start buying a stock, especially on a Friday, you see more and more people slowly exit stage left. I did have to abandon my long-term holdings today, sold them, some for a profit, some for a loss. But at this point, we get into a market that I know is going to be somewhat problematic. From writing black boxes or trading systems, I know that come Monday, with a close down below 1285, there's a number of signals that are going to have people starting to sell that they also have their long-term positions. This doesn't mean we can't rally out of here or get some decent news. I was talking to Steve Rhodes before, and I think he was talking about it in the show this morning. We are going to probably get an opportunity to get in here and get short. It's not anything you need to really chase. I only have one short position on right now, and it's doing okay. But most of these, the risk-reward is poor because probably the most ugly of the stocks have already taken a header. What we do have is a market that is very dangerous. To this point, markets behave fairly well. But below 1285, you're going to start seeing machines start making decisions that humans won't. And I suspect that we're probably going to get something as a bit of news that's going to pop this market. And if the light volume comes in, I think then it will be time to short. To give you a good idea of why I think it's kind of dangerous to be short most things, is my trading career started probably at the exact wrong time for somebody to go full-time trading, and that was right into the long-term capital management fiasco of 1998. What was it, Black Friday or Black Monday? Never can remember of it. Just remember that halfway through the day, the Dow was down kind of probably what it was like today, except the Dow was much lower, at like 8,000 or something. And we were off some miserable amount. What are we off now? 261. I think we were off like 500. It's felt like anyway. I'll have to go back and look at the numbers. Only to see Greenspan come out in the middle of the day with the Fed and be up that by the end of the day. I think it came in about 1 or 2 o'clock in the afternoon. Federal intervention is a issue at these levels. I can imagine that the phone from the White House to the Fed has probably been burnt up today saying, hey, you got to save me. This is it. He's probably going to say, well, really, my job is not to save your job. But it is a political appointment. I suspect that whether or not he can put pressure on him, that political people in both parties, they don't want a horrible market. It's as bad for incumbent Republicans as incumbent Democrats to have a lousy economy going into the stock market. We've seen how incumbents in Europe have fared over the last 3 or 4 major elections, and that's pretty much everyone's been tossed out. Merkel had a lot of her power pulled out in Germany over the last few weeks, and we're going to continue to see this kind of stuff. We're playing around 1280. Is the market is the volume really big? 3.4 million shares? No, you'd like to see probably 4.2. What you don't want to see is the close below. You get into what I've called, and I've talked to Tom about it too, we kind of call it a paper cut market, where you get a paper cut and it starts bleeding, and it's not that bad, but it just doesn't quit. And unfortunately, that's the kind of setup we have now that makes me think that I would rather be either totally out of the market or wait for a bounce to short it if the volume continues to be light. But 1285 was pretty much the mark that most people had. Most trading systems that are either medium or long-term probably would have to say that they need to be worried. Sometimes they just push the market to that mark, but we have enough volume on a Friday, and when we close this last 15 minutes, it's probably going to be very enlightening, let me put that way, to see what really happens in the last few minutes of it. Whether or not a lot of these black boxes will key on the last 5 minutes of data and then start firing orders out here. So we'll see whether or not they'll let our orders go out on Friday, because most of the time they don't. But if they don't, then you're going to look at those orders coming in at first part of Monday morning. And one of those reasons I don't want to be long at the close today, even if I thought that this was going to bounce out Monday morning. We have everything pretty much as bullish as you could think, with, of course, fund buying, all that being the next 2 days, but that we couldn't handle this or even mitigate it or get back above 1295, which I kind of looked at as safety zone for this market, is going to be and continue to be problematic. We've seen a lot of stocks really get hammered, some that I really love. Out here in the market, probably one of the few parts of the market that are getting a little bit of love today, but not a lot, are rare earth minerals. China did come out and start talking about severely reducing exports in rare earth minerals, and one of the few markets other than the gold market actually just ripping out here, because people are thinking, I think, that they can't even be safe in the euro. They'd rather have a yellow gold in their safety deposit box or under their mattress than anything else. But even with some of the strongest economies that buy gold, like India, pulling back, you see a lot of people putting their money in gold over the last few days. I think I'm going to be on with Steve Rhodes tonight in the 5 o'clock hour, talking technology. But at the same time, I think we were talking last week about gold. And I suspected that, or at least my opinion was that we were going to get one more test of that 1800 area before you could say gold was going to be over. Especially in a bull market, I hate to think that you see a high that is not yet at least comes close to being retested. And I think whatever is that, 1893, I think is the high in that gold stock, and that would be kind of what we're looking at. So we'll continue to do that. Again, you can give me a call at 877-927-6648. We can discuss your particular stock. I'm going to say that when I talked about early on Monday or Wednesday was that when you come back from the 3-day weekend, normally the character of the market for the next 30 days to the next big 3-day weekend pretty much describes itself. And right now, closed below 1285, opens up about 1220 on the S&Ps, and I could see that we could meander, play around, pop up and down, do all of that, and get us into July 4th. With no problem. Maybe with something as small as a 60-point range. We'll have to see. Volume is, lower than you would like. But again, I'm going to say that I'm going to really be looking at the volume on Monday when everybody looks at their portfolios and decides whether or not it is time to sell or not. But we'll be looking at that for what it is. Back to news here. And that first thing is, if everybody's trading didn't get a chance to see it, for a brief time today, the Greek drachma was on Bloomberg. And everybody was suspicious that there was a pending announcement, kind of added to the fear level. But anticipating that they may go do that, apparently they already put back in the software at Bloomberg to show the Greek drachma, and we're just testing it this morning. Unfortunately, it showed up and spooked everybody a little bit. But Bloomberg's comments are that they were only interested in making sure that if it did happen, that they had the software significantly tested by that time, and there was no prediction one way or the other whether or not Greece was going to separate from the euro. Another one that, let's see if I can get this up and running, is that's caught my eye is Joe, which is, let me pull it up here real quick, which is the St. Joe Company. They're a housing company in Florida. The gentleman that basically came after both, I think he has done Groupon a little bit, but really famous for identifying what he thought was fraud in Green Mountain Coffee. But for a housing stock, maybe the volume's not what you're looking for today. But we're going to cover this just a little bit more because there's a little more history and color I'm going to put on this. Give me a call, 877-927-6648.
It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxionshares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at Direxionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxionshares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxionshares. To obtain a prospectus or summary prospectus, please contact Direxionshares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
We were kind of speaking about St. Joe's, which is a housing company here in Florida. David Einhorn of Greenlight Capital, pretty famous for his call on Green Mountain, Groupon, some other stocks out there. He's like a lot of these hedge fund manager kind of guys, but a little different than a lot of these guys run around trying to find financials and find out where companies are lying or packing business in the future into current months to get the price up, exercise their options. Sometimes it's that way. Sometimes it's just to get people off their back like analysts. But one of the things we do know is these guys are out there and they're very good at ferreting out problems in their financial statements. He, of course, was very right on Green Mountain. A lot of times these guys will get short, and their short positions will last 6, 9 months, 12 months. But it's not uncommon for them when the trade isn't going their way or they're getting ready to get out to go ahead and make their short very, very public. And that's what's happening with St. Joe's earlier this week. I'll pop up a chart here of it. But we heard over the last few days, you start seeing it come in with lighter volume than the last previous low out here. But with a market that's failing, it's, of course, fairly easy. But normally when you see them start talking about it, it is time for them to go ahead and start covering their short position. I'm sure he's short much higher prices out here. But just be very aware when you start seeing them go public, it means that they're probably about ready to go and cover their short position. The first time I had a hedge fund guy come after me, he knew exactly what I was doing, and I think this had to be about 2003. I think it had to be about 2003 in a smaller hedge fund down here. I had a friend that was in racing, and he called me up and said, hey, what do you think about this company? I said, well, I'd like to short it. And he says, I said, it looks very, very weak. And he starts chatting me up and telling me how horrible it is and everything else. And I continued watching it. Shorted it about a month later. And it started taking a hammering, got hit really hard. I think it was one of the 4-pay educational, like ITT or one of those companies. Can't remember what it was exactly. But he called me back, and as soon as I heard that phone call, and he started saying, "Hey, we're going to be holding this thing much longer. The wheels are going to fall off of it." He didn't hang up the phone before I clicked cover. And pretty much within the next 5-10 minutes after he called, that was the low point for that stock for several months to come. Normally when you hear somebody trying to give you advice in the business that is shorted in a hedge fund, you normally want to be looking the other way. So I don't know if you are short St. Joe, but as a warning, when these guys become public, it's probably a good time to get out of Dodge because they are probably ready to start covering the stock, and as natural buyers, put the price back up. But you can see that heavy volume day 2 days ago where he did come out, and it did hit at another 75 cents. Been short it for a while. Just watch where your news comes from, I guess, is the example. But that he came out this week, I found it very interesting. Other things out there, I wanted to talk a little bit, since it's such an ugly day in the markets, about some things that might help us make better decisions in the future. I'll probably be going through these over the next few weeks with the S&P at 1278, and that's behavioral biases. Basically, a lot of things that we think of can change or color our views. One of the first one is anchoring, and this is the tendency to rely too heavily on one piece of information. For example, when you're buying a used car, maybe someone will focus too much on the odometer reading rather than the engine condition or other factors, or even look at the brake pedal and see how worn it is. Maybe they're always slamming on the brakes and the accelerator. Probably best to not look at one particular thing, but when I learned to fly, they said look at all your gauges, not just focus on the one. Make sure that everything is hunky-dory. If you're headed down, your speed is probably going to pick up. So maybe you notice your speed picks up, but your altimeter doesn't change. Maybe it's a good thing to be checking those against each other as everything comes along. Pretty much that. Another one is attention bias. That's when someone focuses on only one or two choices, despite that there being several outcomes. And I suspect that's what's happening right now with Europe, that we're on one or two outcomes, and there's probably a third that's actually going to happen that no one's thought about yet. Anyway, we'll be back in a minute to start looking at some stocks. Give me a call, 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direxionshares. To learn more about tactical tools for the sophisticated active investor, hit the Direxionshares banner on the front page of TFNN.com.
We've been talking a lot on the Tech Insider, and also on this show a little bit about lockup periods. Groupon, GRPN, is in its lockup period and actually coming out and testing its previous low before earnings date, $9.63 on May 11th, 2.5 million shares. And we're going to have about 2 million today, making kind of an interesting little doji out here. But today is finally the day that almost all of the shares of Groupon will be out for trading, and probably watch this over the next 30 days to see how the new amount of shares out there that are tradable actually trade, give you an idea. One thing that I would rather have is one predictable stock than 20 that just move randomly. And normally you don't get that without at least some time to start figuring out the character, the kind of people that trade that stock. But, not gonna. It doesn't look like it's going to be, what can you say, impermissible. That, I guess I'm a little wrong on the volume here. 2.5 million shares on May 11th. And if that's right, 20.6 million shares today. So keep an eye on that. Okay. But keep an eye on that. We are going to close below that previous low on significantly lighter volume. That huge day that came on earnings that popped up 2 days, and they still have SEC and FINRA investigations on Groupon for those dates. So just continue to think about those things. Probably some things that we're going to be talking about tonight with Steve Rhodes in the second hour. Nothing but Apple. We got a lot of stuff about Apple, what their new iPhone 5 is going to look like, what their shipments look like compared to the iPad, iPhone, and iPad, what Intel's doing in the future, a new solar cell that finally gets up to 40 or over 40% efficiency. It's kind of a neat design. Elon Musk, who's going to have his Tesla car coming out, and also had a good week with the launch and successful recovery of his own spaceship. Not a bad thing, I guess, to own a space company. Oracle and Google, and the results of their lawsuit this week. I'll kind of talk a little bit about that now. But basically, the judge said that you can't patent an API. An API is a application programming interface. That pretty much means if you give it things like names, like a steering wheel and a brake and an accelerator, you may be able to patent the way that those things work, or even trademark or copyright them. But what they do, like brake a car or make a car go faster, you really can't. So as long as programmers who know nothing about Java do the exact same thing in a clean room where they've never been, basically working with Java or something, could duplicate it with the exact same API. And the judge has found, as other judges have found, that's pretty much what's going on. I guess the equivalent is you can't patent and trademark a language, let's say like English, where everybody would have to pay for it every time they use the English language. And that's basically what he's coming down on. But this is like the third part of the lawsuit that Oracle has lost against Google in their Java lawsuit. So it's kind of grinding to an end. We're going to talk a little bit about Flame and SexNet tonight, and what this portends for us in the future, and maybe a little bit of Windows 8 stuff. So we've got a lot of stuff going on tonight. We're going to talk with Steve Rhodes in the second hour of the Tom O'Brien Show. And what else do we have going on? Again, you can give me a call at 877-927-6648 as we watch this market go into the final stretch. We're going to load up a few stocks and see how they did. Been watching fairly significantly Alcoa as one of the canaries in the coal mine since it had gone down and tested on previously lighter volume. And what we were going to see out here. Today, what do we have here? 19 million shares, but we've had higher volume before, and that was what we're getting tested here today. But $8.50 on the December 28th low with 35 million shares on Alcoa, the big aluminum producer. Got down to 530 today. Going to close, of course, below that 550. Volume is not all that extensive today with 20 million shares so far, but did have significant volume coming into that level on 34 million shares on the 17th. So we were kind of wondering whether or not this thing would continue down. You'd like to see a sign of strength, but again, probably going to be a lot more interesting on Monday what this stock actually does. Let's see what else we have. The Commodity Index Trading Company. Most of these have just blown out, so probably not going to spend a lot of time. ProShares Ultra Oil and Gas DIG looks like it's finally filling a long-term gap. I'm going to go back and get just a longer time frame here. But this thing came up like a rocket, and that started off at $28.05 on October 4th. What it did do is come up and, even on really decent volume, 1.6 million shares, gap up on the 10th of October. Is that right? October, November. Yeah, 10th of October. And very, very extensive volume out here. for that day. Like I said, 1.6 million shares. What we're seeing here the last few days is just extremely lighter volume. 900,000 shares yesterday. I don't think that this is right when it says 90,000 shares today. So I'm going to have to check that out. Let's see, June 1st. So we might try something else here. Program options. Let's try one other thing to see whether or not we can get more. Yep, there we go. Find a second server here. It's not going to be too bad. 500,000 shares, probably a bit more, going against that gap up with 1.6 million shares. So I suspect that we're probably going to come into some kind of bounce, both in the energy sector, some of the other sectors, and we'll get a chance to short these things and hammer them if we continue to see light volume out here on Monday. But going to be that. And what else do we have? One of the ones I've been watching out here for natural gas is Natural Gas Exploration Company. Symbol is EROC. It's Eagle Rock Energy Partners. This one's actually not making too bad of a signal, although it is going to close below the low I was looking at. That one's another $8.50 stock, 1 million shares on August 8th. That is kind of hopped down and through it today, 630,000 shares so far. So you've got a little bit more, but this would have to close back above $8.50, but probably portents of energy still being fairly weak out here and not quite ready to buy, although the break of energy and crude today through the level which is support was at 8. Last support level was about 87. Gets you probably, with a, if it doesn't recover fairly quickly, could take you down to 75. I think when I first started my show, someone asked me what would happen to crude. I said eventually it would probably at that time come back to something like 48 and inflation adjusted to about $60. Eventually, all commodities go to some unsustainable level. Like our friend from Chicago used to say, the best cure for a high price is a high price. Best cure for a low price is a low price, and you'll get those things. But they go to unsustainable levels, then they'll come back to the cost of production. Right now, the cost of production is somewhere around $62, and commodities, basically go to heaven and hell. Hell would take you right back down to about $62. I'm not saying we get that in the next couple of weeks, but we've busted through these levels strongly enough that that $62, which is probably the average cost of production, certainly comes up to that level. My thoughts, though, are more of the geopolitical risks, and that is, what can you say? Huge for those Saudi Arabian countries that rely on doling out enough cash to keep their people under control. My question is going to be, as we get into these 80s and into 70s, I think that a lot of them have said that they need $90 to $95 a gallon gas to continue to push out enough money to keep those people happy. And wondering whether or not Saudi Arabia, some of those other countries, can survive without $95 a gallon or $95 a barrel fuel out here. Gulfport Energies is another one that we've been looking at, GPOR. Another one kind of dipping below. It looks like it is going to close below and probably going to come in with at least the same, if not higher volume, making me think that we do have a little bit more weakness to go. I did have a question in the then, which is, do we have volume? And I'm going to pop one out. I look at the consolidated tape for the New York Stock Exchange. That actually includes all ECNs, or electronic commerce networks. You can trade a stock. It doesn't have to go through the New York Stock Exchange, although it's listed there. We continue to see about 1/4 of the volume actually traded across the floor or through the New York Stock Exchange, because in some cases it's 10 times more expensive to trade that way. So most people, big hedge funds, that kind of thing, will trade through ECNs or other broker dealers that don't charge the freight that that the New York Stock Exchange actually does. But what we see is just under 3.9, or just over 3.9 billion shares on the day. That is everything, including anybody that's traded any stocks anymore. Now, with about 15 minutes to go, that projects out to about 4.3 billion shares. But a lot of times these dark pools are holding their trades until late in the day to dump them. So you see a lot of volume in the last 5 or 10 minutes as they actually get these things in before the bell. My question is not going to be what the volume is today, but my question is going to be what the volume is on Monday. And if we start seeing something like 5.1, 5.2, 6 billion shares, that's going to be a real indication that we've got a market and it is ready to move, and dramatically. You might think 30 points today is a big deal, or what else, 250. Actually, when we get to the outliers of probably standard double volatility, you would look at 500 points being a really big day out here, along with about 45 to 50 on the S&P right now. And remember, if you're doing analysis of anything else besides the stock market and statistical analysis, that a 100-point move in the Dow is, and you have a 500-point move in the Dow, a 500-point move is not 5 times as much. It's actually 9.3 times as much. It becomes logarithmic as you get bigger and bigger moves. A 270-point move today, a 30-point move in the S&P, just above the first kind of statistical analysis. You'd look at about 25 points on the S&P right now. So we're just a little bit above what would be standard volatility. When we actually start looking and seeing that hit 50 points, you really want to see that, and it wouldn't be surprising to see something where we do have movement in the way of 50-point up and down days and 75-point or even 80-point intraday moves over the next week. The conditions are right. I can't promise you'll do that. I can tell you what I look like in the market, what my scans show every night, and it is, at this point, what I concern or believe a dangerous market. One of the problems, and I'll get into it a little bit more, hopefully we have enough time before the break, probably not, but I'll come back to it. And that's one of the first things that I really stood out of the book, which is called Trading in the Zone by Mark Wilson, a friend of Larry Pesavento. He wrote a very decent book, but he's got a small passage in it. Actually talks about what happens when he brought a technical analyst into the head of a broker-dealer. And I think you could probably say this was like a J.P. Morgan, something like that, a really big street name. The guy that had been around for 50 years and brought in a brand new technical analyst and said, there's no way wheat is going to go, a nickel lower than this price. And he says, really, you can tell me that from technical analysis. He says, yeah, I can. And the guy that had been around for 50 years picked up the phone. He said, sell 100,000 wheat. And it went straight down through the guy's projected level. And the moral of the story is anybody can pick up the phone at any time and sell. So why these things are general guidelines, it never, you never can be too sure that everything's going to stop at a certain point.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a 1-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, I wanted to check in with Apple because it had been one of the ones that had had this nice little bounce out. I suspect that we're probably due for a test, and it may take a while to get to that on Apple. But you know, they've got big news coming on the 14th, so I have a feeling this might be a very volatile move out here. It has set up an ABC, which we'll have to watch very closely. It's retraced almost 50% of the move up, and of course, it's got to move down on lighter volume today. Doesn't mean we won't continue to pop up if the market turns around a little bit. I've been looking at it when this market came down to $12.95 the first time, a week or 10 days ago, whatever it was. And looking at 533 is really decent support. 585 as really hard resistance. Got up to 581 yesterday as the high. Of course, really selling off today. But not a stock I'm going to be thinking of shorting. There's actually some analysts out there that have done some models and are thinking that by the end of 2013, even at a reduced run rate, that Apple will have somewhere around $200 billion in the bank. So we'll have to take a look at that. And let's see. What else do we have here? Oh, we got. I wanted to look at TLT from Request in the Den from Mike K. It has broken out, so you can see that it had significantly stronger volume than the last move and the leg down. If you're looking at my Power Law Vector Indicator, it's broken out. It's broken out on volume. What else can you say on that? If you were thinking this does anything and you wanted to buy it, certainly probably want to wait until it gets back down to the 124s. This is a big move on huge volume. You got to think that this thing would at least come back down to 125 if you wanted to play it yet again. But everything that you look for in a sign of a huge breakout, that is the last high in December 19th was 124 and 2 cents with 7.8 million shares. You got 17 million shares on the 30th. Yesterday you got 31 million shares. Today you got 21 million shares. So probably getting to some point where this thing may want to pull back to the breakout area. But if you wanted to go long in it, you probably need to be around 125. But certainly you've got a high at 125 that came on 17 million shares, so easily broke that. That was the October 4th high out here. You had the September 22 high, 123 to 87 with 25 million shares. So certainly, any way you look at it, with 31 million shares yesterday, 21 million shares today, you have significant volume. But if you're not already long it, you need to be probably thinking about it getting back into that 120 high 124s, low 125s. Certainly, there's a nice gap there that would probably get filled. And it's 125s, 124s. You have to look at it and play it when it comes back. But certainly, everything that you look for in a breakout. Let's see if we have one last stock. Time for one last stock. Let's see. Yeah, actually, this is not looking too bad. It's one I've been looking at to see what semiconductors were going to do, and that's Jabil Circuits. We'll have to see. It's going to close lower than you'd like it to, which is the volume could always come back on that. But 1818, 5.9 million shares. That was on November 25th, 2.2 million shares. If this thing turns around next week, we might find some bottoms in some of these short terms. Anyway, closing on the lows. See you Monday.